What if I told you that becoming a millionaire has almost nothing to do with being rich? Not because you don't earn enough, not because you weren't born lucky, not because you missed your chance. In fact, one of the biggest financial lies ever told is that you need a massive salary to build massive wealth. Because right now, somewhere in America, there are people earning six figures who will never become millionaires. And at the exact same time, there are ordinary people making average incomes quietly, building seven-figure portfolios without anyone noticing. The difference, it's not intelligence, it's not talent, it's not even hard work, it's one number. A number so powerful that Albert Einstein allegedly called it the eighth wonder of the world. And once you understand it, you'll never look at money the same way again. Because today, we're going to break down exactly how investing just $100 per month can eventually grow into $1 million. Not through luck, not through crypto gambling, not through get-rich-quick schemes. Just math. And by the end of this video, you'll understand why every year you wait could be costing you hundreds of thousands of dollars. Let's begin. Imagine two friends, Jake and Michael. Both want to become millionaires. Both have access to the exact same investments. Both are equally smart. But one decision changes everything. Jake starts investing at age 20. Michael waits until age 30. That's it. Just a 10-year difference. Now here's where things get crazy. Jake invests only $100 per month. Nothing extraordinary. That's less than many people spend on coffee, food delivery, or streaming subscriptions. Michael invests the exact same amount. Same investment. Same monthly contribution. The only difference is when they start. Fast forward to retirement. Jake ends up with hundreds of thousands more dollars than Michael. Sometimes even over $1 million more, depending on market performance. How? Because wealth isn't built by money. It's built by time. And most people completely underestimate how powerful time really is. When people think about investing, they imagine their money growing in a straight line. Put in $100. Get back $110. Put in $1,000. Get back $1,100. But that's not how wealth works. Real wealth grows exponentially, which means every dollar you earn starts earning dollars. And then those dollars start earning dollars. And those dollars start earning even more dollars. The snowball gets bigger, then bigger, then bigger, until eventually it becomes an avalanche. This is called compound growth, and it is the single greatest wealth-building machine ever created. But before I show you exactly how $100 becomes $1 million, you need to understand why most people never experience it. Because they're making one mistake that's destroying their future wealth every single day, and they're doing it without realizing it. Let's talk about that next. So, if building wealth isn't about earning a massive income, what is it about? The answer is surprisingly simple. Ownership. The wealthiest people in America don't just work for money. They own assets. Assets that continue growing whether they're working, sleeping, traveling, or spending time with family. And one of the most powerful wealth-building assets ever created is something almost anyone can own: the stock market. Now, before you click away thinking this is about risky trading, hear me out. Most millionaires aren't day traders. They're not staring at charts all day. They're not predicting the next hot stock. In fact, many of them follow a strategy so simple that most people ignore it because it sounds too boring. It's called index investing. An index fund allows you to own tiny pieces of hundreds of successful companies at once. Instead of betting on one company, you're investing in the overall growth of the economy. When businesses innovate, when technology improves, when productivity rises, your investments benefit. Historically, broad market indexes like the S&P 500 have delivered strong long-term returns over many decades, despite periods of volatility. And that's where the Millionaire formula begins. Not with guessing, not with gambling, with consistency. Let's run the math. Imagine you invest $100 every month. You continue doing it whether the market is up or down, whether headlines are optimistic or terrifying, whether your friends are investing or not. You stay consistent. Month after month, year after year. At first, progress feels slow. Then your money starts earning returns. Then those returns start earning returns. Then the growth begins accelerating. Eventually, your portfolio starts growing faster than your contributions. Think about that. There comes a point where your investments may earn more in a year than you're personally contributing. That's when compound growth starts doing the heavy lifting, and the longer you stay invested, the more powerful it becomes. This is why many self-made millionaires appear ordinary for years. Nobody notices the early stage. Nobody sees the discipline. Nobody sees the automatic deposits. Nobody sees the sacrifices. Then one day people look at the result and call them lucky. But it wasn't luck. It was time. Time multiplied by consistency. And here's the truth most financial influencers never tell you. You do not need to become rich overnight. You need a system that works even when you're not paying attention. A system that keeps working during good times and bad times. A system based on mathematics instead of emotions, because emotions are expensive. Fear makes people sell. Greed makes people chase trends. Impatience makes people quit. But wealth rewards those who stay rational. The people who understand that short-term noise means very little compared to long-term growth. Now, does this mean every year will be positive? No. Markets rise and fall. There will be corrections. There will be scary headlines. There will be moments when people claim investing is dead. And yet, throughout history, markets have repeatedly recovered from recessions, crashes, wars, and uncertainty. The people who stayed invested often benefited from that recovery. That's why successful investors focus less on timing the market and more on time in the market. And that brings us to the most important lesson in this entire video. The goal isn't becoming a millionaire. The goal is becoming the type of person who consistently builds wealth. Because once you develop that habit, the numbers eventually follow. Remember Jake and Michael from earlier? The biggest difference wasn't intelligence. It wasn't income. It wasn't talent. It was action. One started. One waited. And over time, that single decision created an enormous gap. Right now, somewhere out there, a future millionaire is investing their first $100. Not because it's a huge amount, because they're giving compound growth something priceless: time. And if there's one thing you should take away from this video, it's this. You don't need perfect timing. You don't need a six-figure salary. You don't need to predict the future. You simply need to start. Because every month you wait is a month, your future money isn't working for you. And while $100 may not look life-changing today, given enough time, it can become something extraordinary. The math doesn't care where you came from. The math doesn't care how much you earn right now. The math only cares about consistency and time. And the best time to begin was years ago. The second best time is today. If you found this video valuable, hit the like button and subscribe for more powerful wealth-building strategies backed by real-world finance and proven investing principles. And here's a question for you. If you started investing $100 every month today, what would be the first thing you'd do with your future $1 million? Let me know in the comments. Thanks for watching, and I'll see you in the next video.